A major shift is underway as BRICS expands its influence. The group, Brazil, Russia, India, China, and South Africa, was formed to counterbalance Western dominance. In 2024, Saudi Arabia and Qatar, two energy giants, joined BRICS, marking a turning point for the global economy. For years, these nations sought to diversify their economies and alliances, reducing reliance on the West. Joining BRICS opens new opportunities for trade and investment with fast-growing economies. Saudi Arabia's Vision 2030 aims to reduce oil dependence, and China is a key partner in this transformation. Qatar, a major gas exporter, benefits from stronger ties with energy-hungry BRICS markets. Politically, joining BRICS signals a desire for a greater voice in global affairs and more independence in foreign policy. This move gives Saudi Arabia and Qatar more flexibility and influence in a rapidly changing world. To understand the seismic shifts happening in global finance today, we need to travel back to the year 1974, a pivotal moment in economic history. The world was reeling from the oil crisis, and the United States was searching for a way to stabilize its economy and reinforce its global influence. That year, the US and Saudi Arabia struck a groundbreaking deal known as the Petrodollar Agreement. Under this arrangement, Saudi oil would be sold exclusively in US dollars, and in return, the US would provide military protection and security guarantees to the kingdom. This pact not only cemented a strategic alliance, but also set the stage for decades of economic cooperation. The petrodollar system transformed the US dollar into the world's primary reserve currency. Central banks and governments everywhere needed to hold vast reserves of dollars to purchase oil, which gave the United States immense economic leverage and allowed it to run persistent trade deficits with little consequence. Every country, regardless of its own currency, needed dollars to buy oil. This created a constant global demand for the US dollar, reinforcing its dominance in international trade and finance. The petrodollar system became a cornerstone of the modern financial world, but over the decades the world has changed dramatically. China has emerged as the largest oil importer, and the global balance of power has shifted. US-Saudi relations have grown more complex, influenced by new alliances, regional conflicts, and evolving energy markets. In June 2024, after 50 years, the petrodollar agreement quietly expired. There were no grand announcements, but the implications are profound. Saudi Arabia is no longer bound to sell oil exclusively in dollars. For the first time in half a century, it can accept other major currencies like the euro, yuan, or even its own rial for oil sales, opening up new possibilities for global trade. This doesn't mean oil sales in dollars stopped overnight. The dollar remains deeply entrenched in global markets, but the end of the petrodollar era marks a significant turning point and the close of a chapter that shaped the modern world. Now Saudi Arabia is free to diversify its economic relationships and currency options, forging new partnerships and exploring alternative financial arrangements with countries around the world. This shift paves the way for a more flexible, multipolar system in global oil trade, where multiple currencies can coexist and compete, potentially reducing the dominance of the dollar. The end of the petrodollar era signals a major transformation in the global economic landscape. Financial markets, governments, and businesses are all watching closely to see how this new chapter unfolds. Countries are now rethinking their dependence on the dollar, considering new strategies for trade, reserves, and investment as the world moves toward a more diversified financial system. The stage is set for new financial dynamics in the energy market, and the world is watching to see what comes next in this era of change. With the petrodollar era drawing to a close, Saudi Arabia and Qatar are actively exploring new strategies for their oil exports. The world's energy landscape is shifting, and these Gulf nations are looking for ways to adapt and secure their economic futures in a rapidly changing global market. One of the most significant moves is the consideration of selling oil for Chinese yuan, rather than the traditional US dollar. This marks a major departure from decades of established practice and signals a new era in international energy trade. This so-called Petro-Yuan system directly challenges the dollar's long-standing dominance in global energy markets, introducing a new player into the world's most important commodity trade. China, now the world's largest oil importer, has been eager to reduce its dependence on the US dollar. By doing so, It hopes to minimize exposure to American financial sanctions and currency fluctuations, which can impact the cost and security of its energy supplies. For oil exporters like Saudi Arabia and Qatar, accepting yuan payments makes trade with China smoother and more efficient. It also deepens their economic ties with a country that is not only a major customer but also a rising global power. At the same time, this shift helps China promote the international use of its currency, the yuan, and strengthens its position in the global financial system. The more oil traded in yuan, the more attractive the currency becomes for other countries and investors. While not all oil is sold in yuan yet, the trend is unmistakable. More and more deals are being settled in the Chinese currency, and the momentum is building as other countries watch closely. To support this transition, China has established a yuan-based oil trading market in Shanghai. This exchange offers an alternative to the traditional dollar-based systems in London and New York, giving oil producers and buyers more options than ever before. As more countries begin to use the Petrodollar for their oil transactions, the balance of global financial power could gradually shift toward China. This has far-reaching implications for international trade, finance, and even geopolitics. The transition is still in its early stages and is unfolding gradually, but it's already reshaping the rules of international trade. Oil exporters gain more flexibility in how they do business, while China steadily increases its influence on the world stage. The rise of the Petrodollar is more than just a financial shift. It's a sign that a new, multipolar financial order is emerging, with China playing a central role in the future of global energy and finance. The shift to selling oil in yuan is part of a deeper partnership between China and the Middle East. China is now the region's largest trading partner, with trade surpassing $360 billion in 2022. Currency swap agreements and direct investment are making trade smoother and less dependent on the dollar. Chinese companies are helping build Saudi Arabia's Vision 2030 projects, including futuristic cities and renewable energy. China's diplomatic influence is also rising, as seen in its role brokering peace between Saudi Arabia and Iran. By focusing on economic growth and non-interference, China has become an attractive partner for Middle Eastern nations. This partnership is reshaping the region's economic and political landscape. The decline of the petrodollar and the rise of the petro-yuan have profound implications for the United States, touching nearly every aspect of its economic and geopolitical standing. For decades, the dollar's dominance in global oil trade has been a cornerstone of American power, shaping international finance and giving the U.S. unique leverage on the world stage. The dollar's reserve status has long given America significant economic advantages: cheaper borrowing costs, a steady global demand for its currency, and the ability to impose powerful sanctions. This system has allowed the U.S. to finance deficits more easily and maintain a strong influence over global markets. But as more oil is traded in yuan and other currencies, global demand for the dollar could decrease. This shift may lead to higher borrowing costs for the U.S. government and American businesses, potentially impacting everything from interest rates to the value of the dollar itself. The U.S. may also lose some of its ability to use sanctions as a foreign policy tool, as countries develop alternative payment systems and seek to bypass the dollar in international transactions. This could make it harder for America to influence global events and enforce its policies abroad. While the dollar won't disappear overnight, its dominance is being challenged in ways not seen in generations. The emergence of new financial technologies and shifting alliances are accelerating this trend, making the global currency landscape more competitive. The U.S. will need to adapt to a world where economic power is more widely shared, and where cooperation with other nations becomes increasingly important. American policymakers and businesses must rethink strategies to stay competitive in this evolving environment. America's financial markets remain strong and innovative, but the era of unrivaled influence is gradually coming to an end. The U.S. must focus on maintaining its strengths while preparing for new challenges. The shift to a multi-currency system is already underway, with more countries seeking alternatives to the dollar for trade and reserves. This transition will likely be gradual, but its effects will be felt for years to come. The U.S. must adjust to new realities in global finance and diplomacy, building stronger partnerships and embracing innovation to remain a key player on the world stage. The world is moving toward a more balanced distribution of power, and how America responds will shape its future role in the international community. Despite its rise, the yuan faces major obstacles to replacing the dollar. China's currency isn't fully convertible, and strict capital controls make investors cautious. Oil exporters like Saudi Arabia may struggle to invest their yuan earnings freely, unlike with the dollar. US financial markets are deeper, more liquid, and more trusted than China's. The dollar's global reach and stability remain unmatched. Trust is another issue. China's financial system is tightly controlled by the government, making sudden policy changes possible. The yuan's share of global trade finance is still small compared to the dollar. For now, the dollar remains the world's dominant currency, but the yuan's influence is growing. The oil market's transformation reflects a broader global shift toward multipolarity. Countries want more options and flexibility in their economic and political relationships. This new environment allows nations to build diverse partnerships and pursue independent development paths. Multipolarity brings both opportunities and challenges, including increased competition and uncertainty. The rise of BRICS and the Petrodollar is about creating a system that matches today's economic realities. Emerging economies want a greater voice in global governance. The transition may be bumpy, but more countries now have a seat at the table. The future of global energy and finance is still unfolding. Watch the pace of de-dollarization, how much oil is traded in yuan and other currencies. The evolution of BRICS, especially with new members, will shape global energy and finance. The US response, whether it adapts or resists, will be crucial. Technological innovations like digital currencies could accelerate change. The world's financial order is being rewritten before our eyes.